Should you continue to lean into this record-setting rally? Let's ask Morgan Stanley's Sherry Paul. Sherry, so good to have you here joining us on Post 9. I mean, a big week, a big month always for the markets in September. We've got maybe some seasonality at play, maybe not. We continue to set record highs. Can we keep doing it? Is there anything that gives you a little pause? It feels like it's a choose your own adventure in the market. You could choose to see things with a glass half full or half empty. What's your view?
Well, I love that way you just phrased that, choose your own adventure. So it's a great question. It's important, especially for individual investors, because just because the market hits new highs doesn't mean that we're not going to hit more new highs. And I think we had 56 new highs, I think, in the last year or 18 months in terms of this market climb. It is impressive. And the backdrop for those new highs is sitting inside of a really important moment in terms of tech innovation and what has now been, I think, more broadly branded as this industrial revolution being driven by AI. And that's something that we've been thematically investing in now for, almost 4 years. And so there are plenty of opportunities in the market for investors who might have a little bit of FOMO here. But money placement's going to be key and crucial going forward.
So there's been so much, or had been, maybe it's past tense, so much emphasis on the Magnificent Seven. Still big players, still important? Or as you talk about AI, is it all AI, whether you're a Mag 7 player or not?
Well, yeah, I think it's important. What we're really talking to clients about now is why it's important to shift away from Mag 7 into what we're calling the Magnificent Thematics. Yeah, so the thematics in which Magnificent Seven sit should actually be the engine that broadens out performance in the market. And those 4 themes really are deglobalization, which fundamentally, puts you in sort of defense stocks as the world kind of engages in more conflict. We have industrials and materials in that space as an example, including tech. Obviously, the AI, innovation revolution, which continues to push tech within software and cloud computing in particular. Deregulation, which makes it great for financials. We should start to see within these themes more M&A activity as we get into dereg. And then the one thing I think people aren't thinking enough about is longevity and what it means to have an aging population sort of consume or stay in that existing housing as an example, and what the implications are there. So we're leaning into biotech in addition to technology. So there are plenty of thematics that transcend what we're calling the political and policy chaos, that all 4 of which are communicating and accelerating one another in the same time zone. And that's a very powerful setup for earnings and innovation going forward. And that's the one thing that will transcend political volatility is innovation, and that's where we're leaning in right now for client portfolios.
So it makes sense to me, and I guess regardless of what happens in Washington, that doesn't necessarily mean it's going to stymie innovation. But it has to have some influence, does it not?
It does. Well, so for example, like tariff policy.
Yes.
Will weigh, let's say, tariff policy is inflationary, and it may weigh on corporate profits and earnings, but it's not an innovation disruptor. So tariff policy doesn't have any impact on longevity, as an example. And so the key to investing is really leaning your portfolio and looking around corners for innovation and earnings versus sitting in political climates or even overweighting a study on economics, which is sort of a confirmation of what's happened in the past. It tells us the conditions for investing, but it's not necessarily an investment strategy. And so as a portfolio manager for people who actually live in their money, as much as they want to understand what's happening, they want to know, well, what do I do now? What do I do next? And there's a portfolio out there for every risk profile and for every financial plan. It just depends on the composition.